I'm joined now by James Demmert, founder and chief investment officer at Main Street Research. James, it is always good to have you on. We teased coming to this segment talking about some stock picks you have for us. You've got Intuitive Surgical on your list. It actually just got an upgrade today from Erst Group to a buy from a hold. It's been outperforming the S&P 500 year to date. So what's your view on where it goes from here?
Hi, Diane. Good to see you. And ISRG, Intuitive Surgical. We really like the company because, it's in the healthcare space. This economy is what I would call Goldilocks. It's not too hot, not too cold. So we need a company to have consistent earnings with big, fat profit margins. They just got an upgrade today based on margins starting to expand. And this is a very specific company that makes those intuitive surgical devices,
the robotics, right?
Yeah. Hopefully don't need to use one ever. And they're about $2 million a pop. Every hospital wants them. We think it's a great play, a great way to play this slower economic environment.
Is that the one with the Da Vinci robotics?
You got it.
Yeah,
exactly.
Yeah, I remember. And then they had a new version of that. Okay, so I guess incorporating the idea of artistry around medical to make it seem less sleepy, I suppose.
It is definitely less sleepy.
And look, the population is aging, so it makes sense that healthcare play makes sense, right?
Yeah, they're also using AI in the machine and the device itself. So when a surgeon makes a mistake with a trackball, the AI goes to correct it next time that potentially could occur. So there's a lot of demand for this device across not just the U.S., but globally.
You also like BYD. Is this all about their competitive positioning? And I mean, look, they're still got this price war going on in China.
We're a global investor looking for great companies at Main Street that have strong balance sheets and have a lot of demand for their product. But BYD fits right into that. And I think, what we have to think about today is how do we stay away from the tariff situation, right, which is really crimping margins for a lot of companies. BYD is really out of that whole realm because they don't import to the U.S., which is very important. They have a huge market in China and a huge market all over the world and in Europe.
Okay, I'm curious to know your views, and I don't know if this is a pick. You tell me if it's a pick. Broadcom reports after the closing bell today. It's in focus a lot. It's been running up recently, hitting new high after new high. It's made quite the recovery over the past month. What's your view? What's your expectation first for the results today?
We are holders of Broadcom, have been. We're huge fans. We think it's the semiconductor company that most people don't think about because they're too confused and thinking about NVIDIA. Broadcom, reports today, we think they're going to meet or beat expectations. Stocks really run up, and I think it's because AI spending is very robust, as we know. Very important with Broadcom, they're a diversified business, so they're in the semiconductor business, but also the networking. They have a new product, I don't know if you heard about it this week, called Tomahawk, and it's going to increase AI efficiency through networks by double the bandwidth, which is a huge statement. So we think there's a lot of demand for that. So I think they beat expectations and they guide higher.
I know there are some who have the view that the Mag 7 should be called, Nicole's coined this term, Mag 7 Plus, and there are those who argue that Broadcom should be included in that. Do you share a similar view?
I do, but when companies get into that name calling, sometimes they've hit their peak. So I worry a little bit about that. I like the fact that we own a lot of it for a long time. Nobody's been talking about it. That usually means it's going to go higher.
What's your outlook for where the market goes from here? I mean, we've been kind of grinding higher this week. You did see the S&P 500 barely moved the needle, but to the plus side yesterday. Still, there seemed to be some trepidation around that private sector jobs report. Do you think, it's your view, we continue to grind higher, or are you expecting continued choppiness?
We think you grind higher. We said in the initial parts of the decline, this could be a 1998. It's turning into that. We're at a 20% swoop down. All of a sudden, we're a couple of percentages from the high. And we think that the fundamentals in the United States, the economy continues to grow, not at the pace it did, but valuations are still reasonable, earnings way better than expected. And I think the Fed's in the wings. If the labor market comes down at all, they're going to go with lowering rates. So we think the back half with tax cuts and dereg is going to really drive markets to new highs. I think we're one of the only firms on the street. We're at 6,800 on the S&P.
Really?
So that's a ways
feels
from
aggressive.
here.
Yeah, it is.
Yeah.
I mean, look, but to be fair, we've regained that ground that was lost in April, and you had so many brokerages lowering their price target, but now you're starting to see some updating their price targets for the year, and some still see us losing ground by the year and ultimately finishing, like, say, slightly lower, but some see some more momentum, but I haven't heard a price target at that level. Are you expecting volatility to make a return?
I think we saw a lot of that this year, and I don't think we're going to see as much. The VIX is finally coming back down to earth. Again, I think investors are starting recognizing, well, the uncertainty around tariffs is going to start to become certain. Profit margins for a lot of companies in a Goldilocks economy are going to be good. And let's not forget, overseas, those economies are very robust because they're using fiscal stimulus and monetary policy.
Yeah, and look, they've been outperforming the U.S. I mean, the S&P 500 has been playing catch up, but, for instance, you look at Europe, the FTSE and DAX still outperforming. We'll catch up, though. We'll catch up. James, we'll leave that conversation there. That's James Demmert, founder and chief investment officer at Main Street Research. Our thanks to James. Coming up.